All right, guys, Apple and Amazon reporting. Amazon just reported. We're going to go through that now. They're up big after hours, 6.3%. They beat on revenue, beat on profit. In this video, we're going to go through Apple and Amazon, some high-level things, their actual earnings press release. We like to do these things just to give people an idea of what the guidance is. But remember, we're long-term investors. We don't get bogged down by quarter-to-quarter results. We want to sit there and focus on the long term. No company is going to beat every single time. So it's very important to understand that. These videos are great for beginners and great for advanced because we have something in here for everyone. If you're more of a beginner investor, that's awesome. You're going to learn a ton. If some things are confusing for you to start, that's the way it should be. Over time, you'll get better. Just watch the whole video. We will go over analyst estimates. We will go over our stock analyzer tool in which we will sit there and determine a price to pay. But more importantly, guys, we have a big announcement to make. We have hired a new analyst over at Everything Money. He's right here. His name is Oliver. Oliver, say hi to everybody, buddy. Say hi. This is Oliver. He's my... Sit down. Okay, sit down, buddy. All right, he's one of my dogs, and he's here today because he had a little vet appointment, but it turns out his heart murmur is okay. He's fine. He's 13 years old. Look how good looking that dog is. All right, so... Oh, it's up 7% now.
Yeah.
So Amazon's up 7%. Oliver, stay, buddy. Mo, let's go over, why don't you go over what they reported versus what was estimated?
So they were expected to do 35 cents per share. They did 65 cents.
Great.
They were expecting to do 131.5 billion, and they did 134.4 billion.
So they crushed
revenue.
it.
They crushed it.
And they made 65 cents.
Yeah.
Guys, this stock is currently at 138 bucks, and it's all-time high. If you look right here, guys, 188.65 2 years ago. 2 years ago, it's still down. So everybody thought Amazon could... I remember years ago, people telling me, Paul, you just don't get it. Amazon's going to go up forever. Well, this is 2 years of down. Now, it doesn't mean it's going to end that way, but guys, 2 years. 2 years, it's gone nowhere. We just had an interview today with Aswath. Mm-hmm. And I said to him, Amazon owns my brain. Because this is the company that is in every single business imaginable. And I still don't know how to value it because there's arguments even about what the gross profit margin is for Amazon. There's been a long time where 100% of their entire company's profit came from one division, Amazon Web Services.
Yep.
And even with a business like that has monster gross margins, they still can't seem to make a lot of money. Now, there's going to be a lot of haters on this video. Paul, you don't get it. You don't get it. I know. I don't get it. I get it. You guys are all brilliant. As long as Amazon's an awesome company, pay whatever price. And that's what you're saying. Because, guys, every single person I hear who loves Amazon as a stock, when I ask them the reasons, none of them are ever based on numbers. And when that's the case, if it's all qualitative aspects, as great as it can be, it means no price is too high. And if you don't believe me, add 10 zeros to the stock price. If your thesis is still true about why you like Amazon, then you're not an investor. That's just it. Because at the end of the day, even though Buffett and Munger spend 95% of their time talking about qualitative aspects, they only do that after the quantitative part has made sense to them. You still have to remember that you cannot overpay for a good, you can overpay for a good thing, but it's going to hurt you big time. All right. So high level things. I'll get through those. Then Mo will go through the annual report, the quarterly report. Market cap of $1.32 trillion. Trillion, guys. That means if you bought every share on the market and owned 100% of the shares, it would cost you $1.32 trillion. They did revenue of $525 billion. Guys, look at this net income. $4.3 billion, 5-year net income average of $15 billion. So in the last 5 years, their average profit margin is 3.8%. Guys, this is like Sprouts Farmers Market has the same profit margin. And we've been hearing this from Amazon for how long? Yeah. The profit's coming.
But it's never come.
Come on.
It's never come. That's the thing.
Come on. Free cash flow, negative. Now, I actually don't disagree with this they have increased their capital expenditures. Remember, free cash flow is cash from operations. What do they make in the business itself? Subtracting out the capital expenditures. What are capital expenditures? They're investments in themselves, in the property, plant, and equipment. When they buy planes to go do shipping, when they buy trucks, when they build warehouses, that is the capital expenditure. Okay? So I look at this saying, all right, that's fine, but look at this, guys. 5-year return on invested capital, 8.3%. That's low. Now, it could be because they spend so much time, so much money investing back in the business. And I know, I don't get it, guys. I just don't get it. 5-year PE of 88, 1-year PE of 308. Okay. Mo, why don't you go over what you're seeing in the quarterly report, in the earnings press release?
Yeah,
that way we can get through it.
So sales increased 11%. North American segment increased 11%. International increased 10%. Amazon Web Services segment increased 12%. Operating income increased to $7.7 billion in the second quarter compared to $3.3 billion in the second quarter of 2022.
Oh, good for them. That's a big jump.
Yeah, I think you're going to be impressed with some of these numbers here. Net income $6.7 billion in the second quarter compared with a net loss of $2 billion.
Was that net loss though having to do with writing down like Rivian and things like that back last year?
Yep, they mention it here, including the non-investment in Rivian. No, they're not including. I'll have to go and look.
That's for the, yeah. So
I'm pretty sure it was.
Last year they had some investments that they had to like, now the new rule for the SEC is if a stock that you own goes down or up, you got to report that as income, even if you don't realize the sale of it, which is beyond stupid. But these are also the same people that didn't catch Bernie Madoff. So, by the way, SEC, don't get mad at me.
Operating cash flow increased 74%.
Wow.
To $61.8 billion for the trailing 12 months compared to $35.6 billion for the trailing 12 months ending June 30th, 2022. Free cash flow improved to an inflow. Actually, I have an inflow here. $7.9 billion
for the trailing 12 months
compared with an outflow of $23.5 billion for the trailing 12 months ending June 30th, 2022.
Wow, that's great.
Yeah, so there are things that are changing here.
Changing.
Maybe it's Andy Jassy. Is it Jassy or Jazzy?
Jassy, I think.
Obsessing over customers. Listen to some of these numbers. So far this year, Amazon has delivered more than 1.8 billion units to Prime members the same or next day, 4 times the number that was delivered at this point in 2019.
Did you hear this, by the way? That Matt and I were talking. We have a good friend of ours who's living in Rochester, Minnesota. He doesn't get next day and same day delivery because it's so far from many. It's 150,000 people, but it can't just. It's by itself. It's not like it's 100,000 people like Canton is. 150,000, but it's clear near to Akron and near Cleveland, so they can do that.
Yeah.
He was surprised. I ordered something with him when he was here, and literally was there that night. He was like, "Oh my gosh," or something like that, or maybe it was next morning.
We got the new Rivian trucks here too.
We do.
I've seen so many of them.
Yeah, first time I saw one of those was in Dallas.
Oh, yeah.
When we were visiting.
I've seen it's probably 25 plus over the last 5 days or whatever. They're everywhere.
So how long before you start hating Amazon for their shipping department?
No, they're great. You know who's great?
Who?
Amazon and the U.S. government. You know who sucks? FedEx, UPS. Mikey's upstairs right now reaming some poor lady on the other end of the chat about losing some documents that he has.
With whom?
UPS. He's like, I don't know. FedEx is great for me. UPS is terrible. This is the 4th lost package this year.
Oh, boy. Okay.
Anyways, wait. I'm not done.
That's what I meant. Keep going.
They held the biggest Prime Day ever.
Yeah.
Prime members purchased 375 million items and saved more than $2.5 billion. I bought a lot on Prime Day. Yeah, it's crazy.
I didn't buy anything on Prime Day.
These numbers are crazy. These numbers are crazy. Good for them.
And by the way, Amazon does a great job of making life easier for the consumer.
And that's what they're all about. I listened to, here, he even has it here, obsessing over the customer experience. And that was what Jeff Bezos talked about in a 20-minute interview I heard with him. He's just obsessed with the customer experience. And they do a good job. They make me keep coming back. I complain a lot.
I remember one time I bought a watch winder from Amazon, and it came, and like 3 weeks later it broke. So it was not a cheap one. It was like $400. So I had Rosie call them, and they literally said, "Oh, Paul's a good customer. Just keep the watch winder. We'll send you a new one." I was like, "Wait, what?"
Do you remember those? Do you remember those hoverboards?
Yeah.
So I bought one of those. They actually reached out to me. I didn't reach out to them. This is when houses were burning down from them. And they go, "Hey, we noticed you bought one of these for $400. We're just going to credit you $400 back." And I'm like, "Why? What do you want me to do with this thing?" They're like, "Oh, just throw it in the garbage." I'm like, "Oh, thanks." They don't want your house to burn down. End of the story. I kept it. My house burned down. No, I'm just kidding.
And I sued them. Okay. What else? Oh, Air was a good movie.
Air. Oh yeah. Now, they're getting into streaming. Actually, the last 2 nights we've watched 2 movies, The Hunger Games 2 and 3 or something on Amazon Prime.
Hunger Games really good movies.
Well, I've fallen asleep both nights, so I don't know.
Do you like it, Tim?
I actually do think it was pretty good for the.
I liked Air, but I went to the theater to watch Air.
Yeah, that was the first time I went to the theater in a while.
That's right. We all went. It was boys' day. Me, you, and Matt.
And the Brofman. I might as well say his right name.
Yeah.
They're getting into healthcare. Kind of.
They're getting everything.
They're worrying me on the healthcare end, but that's okay.
Let's take a look at their 8 pillars, Mo.
Let's do it.
Look at this. Ready?
Oh.
So guys, if you have our software, you can customize your pillars up to 12 pillars and like 4 quadrillion different variations, and more on our software shortly. But let's go over it. Guys, the only thing that's growing is revenue. Yeah. Now, the story I'm going to hear is, Paul, it's all about the growth. It's all about, I get it. I do get it. But the thing that's going to happen to me is, how do we drive, for a company that's worth 1.32 trillion market cap,
this is a 1.32 trillion market cap, which acts like a $1.3 million startup.
People treat it like it's that.
Yes.
No, Paul, you don't understand. There's tons of growth. I'm like, I get it, but I mean, there's $525 billion in revenue. How much faster can they grow?
Yeah.
Look at AWS. Their most profitable division only grew 12% year over year.
Right.
That's not a huge. No.
And that's going to be the majority of your growth, probably.
So I look at this saying, okay, let's say you assign a 25 PE to this. What does that to make a year? $50 billion, right? It's a little over 50 billion, like $50.5 billion. I think that's $50.3 billion, whatever it is.
Far away from what it is right now.
Let's see their best ever annual. Let's go to annual on their income statement.
It's right here.
Their best ever year was 33.
I don't know.
And that's a 25 multiple. Yeah. Now you might sit there and say multiples don't matter. Okay, I get it, guys. Guys, every investment's the present value of all future cash flow. If you don't believe that, nothing I'm going to say is going to help you. Now, the good news is the vast majority of our subscribers do believe that, and they joke with me on Twitter and say, right, Paul, because every investment's the present value. If you make an investment, your return is going to be based on all the cash flow you're going to receive in the future. We don't know what that cash flow is going to look like, right? We have no idea. No clue, but we can make estimates about the future. We can sit there and say, okay, well, maybe they'll do this, maybe they'll do that, etc. And that's what we'll do in our stock analyzer tool. We'll sit there and we'll go through it and we'll figure out what can they possibly be worth in the future. Let's go to analyst estimates. I believe Apple should be reporting right now.
Yeah, I'm monitoring the Twitter machine.
They're expected to make $1.62 in profit per share this year, and $6 in 4 or 5 years, based on the 9 analysts who follow them 5 years from now. That's a lot of analysts. Look at the range here, Mo. $4 to $9.
Jeez.
So
range.
at 4 times 20, you're at $80 a share. 9 times 20, you're at $180. So for 4 or 5 years from now, that's not really much of a return, even in the most optimistic of analyst assumptions for earnings per share.
You're going to like these revenue numbers you see there.
Oh my gosh.
Pretty wild. They're pretty wild.
I mean, there's low double-digit growth for a $500 billion company. So let's see what they're looking at right now. 7.5% Amazon's up. All right. Should we do stock analyzer tool right now, or should we go to Apple and start reporting on that one? All right. Let's. Okay. Before you tell me what Apple did, I want to pull it up and see how many people have creamed their. All right. It's pretty flat.
Oh, is it?
Yeah.
All right.
So they crushed?
They beat. So Apple did, they were expecting $1.20 earnings per share. They came in at $1.26. They were expecting $81.79 billion in revenue. They came in at $81.8 billion.
Oh, so exactly there. So let's look at the quarters.
We'll see what happens.
So quarterly, last June, they did 82.96. So a little bit under last June. So year over year drop. Oh, now they're in the negative.
Oh, yeah?
Mo's got a very, very expensive position in Apple. This mother effer has a $17 cost basis on Apple.
Yeah.
He's the first one in Everything Money to have a 10-bagger. It's now an 11-bagger, actually.
Yeah.
You're very, very proud of you, Mo.
Go up.
I hope you die a horrible death, but I'm very, very proud of you.
Let's see what's in their press release.
That's incredible. Let me look up some high metrics of Apple. $3 trillion company. Pays a cute little dividend of 0.5%, which is still $15 billion because they're a $3 trillion company that eats up less than 20% of their free cash flow. They've got a $385 billion in revenue, a PE of 32, a 5-year PE of 39. Very consistent profit margin here. So remember, Amazon 5-year was 3.8%, and their 1 year was 0.8%. Apple's at 24.5 in the last year and 23.8% in the last 5 years. Wow. Look at this 5-year return on invested capital, 39%. Now, obviously, Apple cannot reinvest at these $100 billion a year at these high rates of return, but it shows a moat. It shows that they're probably not going anywhere, and they do find areas to invest in. They have the ability to go deploy that capital. Now, I don't get this dividend. I seriously don't understand why I even pay this dividend. But Berkshire has Apple, and everybody's like, oh, Warren Buffett loves Apple. I'm pretty confident Warren Buffett's not buying Apple at these prices. I personally believe he believes 140 is his price. Mine's probably going to be lower because Warren Buffett has a gazillion dollars and has to deploy it somehow, right, Oliver? Oh, what do you think? You're the Oracle of Richfield. You're the Oracle of Akron. Why are you looking? Are you hungry? You haven't eaten all day because you're at the vet. All right, well, let's keep going.
Yep, keep going.
Mo, what do you have on... do you want me to do? I'm going to do the 8 pillars real quick.
Go for it.
So guys, 8 pillars in Apple, very different. The only X's are their valuation metrics. And remember, we don't know if these values are too high or not. It all depends on what kind of return can they get on the money invested in the business, what kind of growth rates they have. And Apple is just a ginormous company. How do they really grow this revenue? You know, it was funny. We had an interview with Aswaf today, and he goes, the reason I wasn't so enamored with the iWatch was even if Apple controlled 100% of the market, it wasn't going to move the needle much. Yeah. That's the hard part about really, really large companies. A lot's got to happen for them to move the needle. What do I mean by that? When you do $385 billion in revenue, if a new business pops up, they can generate $10 billion in revenue. It's not even 3% of the current business. It's very hard. It's the being a victim of your own success. You could have an opportunity for a $10 billion business and it doesn't do anything for your company, right? That's the hard part about these very large companies. Now, the other great thing about these very large companies is they're probably not going away. But you got to wait for market sentiment to really shift against the company or against the market in general to get really good deals. Really good deals. Be ready to pounce. But remember, if Apple tomorrow went down to $70 a share, you better believe there'd be 1,000 stories out there about why Apple is dead, even though it's probably not. I was just on Twitter today, and somebody wrote, you know, I used to love PayPal, and I bought a lot of it, but now at these low prices, I don't think I like it anymore because I don't like their margins. And I started to write, hey, moron, you're going to have an excuse for why the stock is down. But if you liked it at 100 and you didn't factor in lower margins, that's on you. Now, what he's really saying is he's scared seeing a stock fall. Now, to me, I look at it going, okay, I believe PayPal is going to be around. And I believe that if I pay a certain price, 60 to 65 bucks, and the company keeps growing at what I expect it to grow at, even a lower rate, I'm probably going to do pretty well. That's what your thesis should be. That's what your thesis should be. Is that going to work? That's what we're trying to teach here, is don't get caught up in the emotion of where the stock price goes. Get caught up in the numbers and the story. Has the story changed? Have the numbers changed? If they haven't, then use a stock falling as your opportunity to buy more shares. We're trying to teach that process here. That process is very, very important. Okay? I saw a great quote today by James Clear, and I'm going to talk about it in our community, but basically said, goals are what people have when they want to win today. Process is what people have when they want to win the rest of their life.
That's pretty good.
That's the big process is going to help you win the rest of your life. Now, I do believe in goals, but I believe in a process to help achieve those goals. And the process of value investing does work. The process of any investing, as long as it's fundamentally sound and is reliant on the numbers to realize that you can overpay for a good thing. If you realize you can overpay for a good thing and you avoid that, you'll probably do pretty well. But investing is hard because we don't know the future. All right, Mo, what do you have here?
Here's a little breakdown. So this is comparing it to 2022. Products, $60.5 billion this year, 63.3 last year. Services, 21.2 versus 19.6. So that went up. No surprise there. Let's see what else we have. If we can get to breakdowns. iPhone, $39.6 billion versus $40.6 billion in 2022. Macs, $6.8 billion versus $7.3 billion. iPads is a big drop. $5.79 billion versus $7.22 billion.
Oh boy.
Wearables went up. That's the watch. $8.2 billion versus $8 billion. Yeah, but overall sales, like Paul said earlier, dropped. So
Not by much.
Not by much. Is a very flat reaction. I know that people were talking about this possibly dropping 10%, going up 10%, and it's very...
You know what I'm most excited about for Apple? This is what I'm really most excited about for Apple. I can't wait for Apple's stock price to fall so hard that they just use all their cash flow to buy back a crap ton of shares.
And let's go to
a crap ton of shares. Look at their, quarter. So right now, I'm on the quarters, I think. Shoot, let's go annual.
I just wanted to see...
They had 26 billion shares outstanding 10 years ago. Now they have 16. Imagine in 10 years, if they're able to buy back 10 years, that'd be almost $1 trillion in free cash flow. And let's say the stock price falls to 120, 130 as an average, or 140 as an average. They could buy back probably another, 800 million shares? 8 billion shares? Is it 8 billion? Yeah, 8 billion shares. That would take their average shares outstanding in half, which would double their earnings per share. That's what you want.
I really wish we would have saw in here remember when they fell at the end of 2021, beginning of 2022? Or was it end of 2022, beginning of 23?
You can go see where, so they
look
fell.
Where their fall was. I wish they had because they got to $124 and change, I believe.
So December 2022, the low was 125.50.
Okay.
So it's all of 2022.
Okay, so they didn't change their buybacks. I mean, they buy back shares every year, every quarter it looks like, but they didn't drastically increase it. And I wish they would have.
Yeah, they didn't buy back many shares then. Okay, so let's go see what analysts are saying about the company. $6.10 per share in profit this year, $8.31 in a few years. Guys, not much growth there. Not much growth. Mid to high single digits. Okay, revenue growth. Mid to high single digits, 392 to 520. Guys, again, it's not going to be a big grower. It can't possibly grow 20% a year.
Will it be a shower?
Hey, Oliver, you want to show everybody your pickle?
Oliver, write that one down.
Oliver, you going to show everybody your pickle? Okay.
We're having a staring contest.
I think I'm going to start bringing a dog on every week because I've got 84 dogs. I can bring them on for the next year and a half. Okay, somebody out there is going to believe I have 84 dogs. All right, so stock analyzer tool. Let's go through this for both Apple and Amazon. So a couple of things, guys. Watch all the way through to the end of this. You're going to want to hear our explanation for things. You're going to want to see things for both Apple and Amazon. And this software, this stock analyzer tool has been used over 2 million times since we opened it. This is the most popular part of our site. But it's not the only tool we have. We have all these other tools right here. And our biggest ones, all right here. But guess what? This real estate calculator hasn't come out yet. But when it does, Tim, do you know when this real estate calculator is going to be ready for release?
Yeah, we're just tweaking a few things with Andrew.
Sometime this month?
Yes.
So end of August. And then once it's released, guys, it's becoming its own separate program that'll be sold separately. But if you sign up now, this will be included. So you're going to save yourself $20, $30, $40 a month, maybe even more by signing up now and getting real estate calculator included. And of course, you get the community of like-minded investors, thousands of people talking per day, and we're really going to spend a lot more time. For those of you in our community, there's going to be some rewards coming out soon that will reward you for being active in the community, active in the software. We will get discounts on your software by being more and more active. So definitely get in there. It's a great place to engage and learn from people and be around. Go to everythingmoney.com. It's a little over $1 a day. It's a no-brainer. Go sign up. So, Mo, let's start with Apple. We're going to do a 10-year analysis on Apple.
Okay.
We want a low, middle, and high revenue growth number. Look at this, by the way. Look at this ROIC increasing. Mm-hmm. Incredible. Incredible. All right, so what's a... Give me some low, middle, and high numbers and I think we're going to have to talk through this one because I don't know if we're going to agree on this.
Okay. 5, 8, and 11.
See, I think 3, 6, I think 4, 7, and 10.
Okay. How about you put yours in? I'll put mine in.
Okay, why don't we do that? We're going to do it separately here. Okay.
What do you think for profit margin?
I'm going to do 21, 23, and 25.
Agree with that.
24, 25.5, and 27. PE. Oh, this is where it's hard. Guys, the reason it's hard is you got to pick a PE that you think Apple should sell at. Now, on the one hand, they have a high return on invested capital, but they also don't have a lot of growth rate, but it has a big moat. You should be willing to pay for a big moat. But how much? This is the art of investing. We don't know the exact number, and I always come up with a different number every single time. So I'm going to do something crazy. I'm going to do 17, 21, and 25. What'd you do?
I did 16, 19, and 22.
Okay. And Mo's the big lover of apples. Of apples, so I'm surprised he did that low. Mm-hmm. Now, finally, for our desired annual return, guys, the higher our assumptions, the more return we need because we need margin of safety. So as you go up, you need a higher return. Now, Apple is a huge company, and we beat it up right here, potentially. You can get 9 or 10% from investing in a low-cost ETF. So it's up to you to decide what return you want to own this company. So I'm going to do 9, 11, 13. Never forget. What'd you do?
I did 10, 12, 14.
Excellent.
All right.
So guys, we're going to hit the analyze button. Remember, stick with us for this entire video. We're going to do Amazon next, so make sure you stick around. Oh, wow, it's down now, isn't it? Oh, still 0.63%. All right. Low price, I have 90 to 100. High price, 164 to 177. Middle price of 125 to 135. Now, here's the key, guys. If you pay today's price and the low assumptions occur, you're going to make about a 1% return. If the middle assumptions occur, you're going to make about 6.65. The high assumptions occur, you're going to make about 12%. Mo, what are your numbers?
About 90 to 100 on the low end,
Same
150 to 170 on the high end,
Okay.
115 to 130 in the middle.
Okay, I have in my watch list at 120. I think I'm going to change it to 125. So I'm going to put here, I'm going to go 125 right here. I'm going to have notify me. And that's the great thing about our software, guys. Everything's on your phone. 10,000 companies, all these tools, everything on your phone, on your desktop. You'll get an email. I just got an email this morning. PayPal hit my price target, etc. So just keep that in mind. Now, let's go to Amazon. How is Amazon doing right now? Amazon's up 6.8%, so not as much as it was before. So again, we're going to do our stock analyzer tool. We're going to, now this is the hard one.
That's why I'm just starting. I mean, for revenue growth, I did 5, 7, and 9, and then I went to profit margin, and I was like,
But remember,
okay.
like the analysts think in the next 5 years, you're going to have 10%.
They do. But
Here's what I'm going to do.
I don't know.
I'm going to do 6, 10, and 14.
Okay.
YOLO.
All right.
Profit margin.
Do you bank on them making more profit in the future?
Yep.
Okay.
I'm going to go 3, 6, and 9.
Whoa. Okay.
If they can't make 6%, but they haven't made 6%.
That's what I'm saying. And it's been a long time, and they're huge, and they like, I don't see anything changing with them anytime soon.
Good God.
That's why I think.
3, 5, and 7?
Sure.
Good God. PE.
$1 billion.
Let's give them the same thing as, I'm going to go 17, 20, 23.
They collect that one.
Same with the price of free cash flow. Guys, this is why Amazon's so hard, because they haven't, they keep saying, don't worry, it's coming. You know what they are? They're I don't know how to describe it now. Like, you guys, everybody knows the person who's always like, oh no, don't worry, it's happening, it's happening. And I get it.
Sleazy salesman.
Amazon's done a great job of generating revenue, but we haven't seen the profit. And I've been hearing for way too long that the investing is working. But the investing is supposed to work by paying out to investors
and
profit.
I think a lot of the investments work, and then instead of they just go and do another crazy project.
Yes.
And then if that works, they go do another crazy project. They're just like, it's like ADD. You're just never satisfied.
All right, what desired return are you putting in?
I would ask what to explain today. 11, 13, 15.
I'm actually going to do 12, 14, and 16.
I almost did that.
And here's why, Mo, because I'm assuming the thing they've done for the last 10 years is going to be their low point for the next 10 years.
Yeah.
I need to have that margin of safety. I need the extra return because I don't know if I believe that they're going to hit that.
I am going to I'm going to change my profit margin to 2% and my free cash flow margin 2%, but leave my annual return at 11.
Okay.
All right, let's see.
Hit the analyze button. Guys, stay with us the entire time. Here we go.
Oh my God.
Low price of 25, middle price of 55, a high price of 100. If you buy at today's price, you're going to lose about 7.5% if they do the low numbers, 3% if they do the middle numbers, 12.5% if they do the high numbers. Guys, I have it in my watch list of 50, and guess what? I'm keeping it there because I think it's just too hard for me to understand if they can actually hit these numbers. 6%, this assumes 6% profit margin, which they have not done in the last 10 years. They've done 3.8%. This is hard for me to swallow.
Yeah.
Oh, Oliver, what do you think about Amazon? Do you want to buy some treats? Oh, he didn't even move for treats.
He's tired.
Oh,
and
buddy.
hungry.
All right, guys, thanks very much. Subscribe to the software, everythingmoney.com. It's a little over $1 a day. You know you can do it. It'll change the way you look at money. We have tons of people who literally say, I can't live without the software. Go sign up now. Take care.